While stocks are going sideways, there's an entire asset class which has been making new highs, or at least seeing a lot of institutional money flow in. That is the commodity asset class, and in this video, I'm going to show you how to build a very simple indicator which tracks 10 commodities in one simple view to try and find where you might still have some opportunities to join this boat. If you take a look at gold, you take a look at silver, you take a look at crude oil, for example, you take a look at copper, it's very clear in most of these asset classes, outside of copper in this case, that a lot of big money has been flowing in. In some cases, like crude oil, especially gold, especially silver, you can already see much of these rallies with new all-time highs. However, I think there's still some opportunities, places like this one inside of corn. And the only way I found this one was by building this very simple indicator, which I'm going to show you how to build in this video. Let's get started with first opening up our indicator code, and I want to start by highlighting the discussion with the market pulse indicator. This is going to be the base of what we use to build this entire tracking commodities indicator. Now, we've done something similar with our utility labels. Here's a refresher. The market pulse is our substitute for moving averages. The way we do this is we have one very simple line which appears on our chart. If I were to add the market pulse indicator, you can see that line. That line has one of three colors: green, red, or gray. Green means we're in a market stage of acceleration. Red means we're in a market stage of deceleration, which is what we see in corn. And gray means we're in a stage of either accumulation or distribution. So we have four different market stages, and the market pulse indicator makes it very easy to see what market stage you're in. There's no guesswork, there's no 4 or 5 lines, there's one line. And the benefit of that is we can leverage that same non-discretionary method of identifying the market stage for our commodities. And that's exactly what we do here. So we apply the market pulse code, but instead of needing to be on just one particular market to see this line, we're applying it on 10 different commodities here. Why 10? I think these are the 10 commodities worth tracking, the 10 major ones. If you want to add more, I'll show you how to do that. Now, before we dive into writing some code, I want to also show you our utility labels indicators, because they utilize the same concept that we're going to be building here. For example, we have a set of utility labels that we've built specifically for our broader sector markets. We can see that right here. We can also see we had a set of utility labels which we built specifically for market internals. If I load that in, you can now see the TRIN, the put-call ratio, the transports, and the semiconductors. So this allows you to keep track of a group of symbols very easily. And in this video, we're going to build the utility labels, but this time for our commodities markets. So I'm going to use the sector code as our starting point. If you don't already have that, I'll leave a link to download it in the description box below. And I'm going to paste that in here. Now that will create a new study. As of right now, we're tracking the old sector ETF prices, in this case XLK, the symbol, all of that good stuff. That's okay. We're just using this as our cheat code, if you will, to get started. If you want to know how to actually build this original code, I'll leave a link to the tutorial in which we do that, so you know how to start completely from scratch if that's something you're interested to learn as well. For right now, I'm going to show you how to extend this to a new group, which this is going to be utility labels, and here, this is going to be commodities. Now, if I were to click OK and apply right now, you would see the same sectors because we haven't changed anything inside of the code yet. We need to still do that. All right, so now let's open up this code that we used as our starting point, and we can take a look at what each chunk is telling us. Now, if we start with the top, we have our XLK chunk here. If we start by taking a look at all of the different components we need for XLK, it's really just two as our inputs, the close price and the volume. So now, instead of XLK, I want to change this to track the gold future. So I'm going to make this update, and we're going to see the errors come in. That's okay. We're going to work through those errors one by one. So as of right now, I have GC price instead of XLK price. And our symbol here, instead of tracking XLK, is going to be the futures market I'm going to track it to, which is GC. If you wanted to use GLD, just plug in GLD here instead. Next up, we're getting the volume, and again, I'm using the volume of the futures contract, which is GC. Now, the next thing we have to do is in all of these places, you'll see that there's an error here, which is there's no such variable XLK price or XLK volume. That's because we just renamed it to GC price and GC volume. Now, we can sit here and change this manually, but that's going to be quite tedious, especially considering that we have, 9 more of these that we're trying to do. So here's a simple trick. I'm going to copy all of this code where we still say XLK, and I'm going to bring in my notepad here. This is a basic notepad, and I'm going to paste in that XLK chunk that we just did. If you're on a Mac, you may need to use, I believe the software is called Text Edit. Now here, I'm going to use the replace feature. This is by pressing Control H on a PC. This comes up where we can now say, find all instances of XLK and simply replace them with GC. Once I click replace all, we now have all of these variables fixed. I'm going to copy this, and I'm going to come in, and I'm going to paste this in where we had the XLK variables. Now, if I click apply, we should see this technology here has now changed and we see GC instead. We need to still change the word technology. So to do that, let's come into our add label. And here I'm going to say gold. Apply. And that takes care of that. Okay, now we can move on to the second one, which is healthcare. Now, instead of healthcare, we want to track silver here. So I'm going to put in silver. Now, for our futures contract, that's SI, so I'm saying SI price, SI volume. For our symbol, very similar process. We're going to add in the futures contract, and you'll see how having this template makes it super easy now that we spent all that time the very first time building it to now extend this. So I'm now going to copy and paste this into the same Excel notepad that we had. This time, we're replacing all XLV with SI, replace all, and I'm going to copy this and paste that in for this chunk and change where we say healthcare to silver instead. And just like this, we're going to keep working our way down. So now if I were to click apply, we have silver. The next one that we have on the list is crude oil. So if we want to add crude, I'm sure you've guessed it, crude oil, CL, CL. I'm going to now copy all of this time where we say XLF, paste that in here, replace all instances of XLF with CL, come back into our code, paste that in, and update where we say financials, click apply, and now you'll see crude oil. Now I'm going to go through the remainder of the 7. I think you get the process, the overall idea of how to make these updates with the 3 examples we did. I'm going to pause the video now, and I'll resume it once I have the final version of the indicator built, and let's see what we have then. What we see with corn. I remember seeing corn for the market stages, and if there's any other opportunities. All right, so I've finished all of the 10 commodities that we had. So we now have gold futures, we now have silver futures, we now have crude oil futures, we now have copper futures, we now have natural gas futures, soybean futures, and corn futures, wheat futures, platinum futures, and palladium futures. So 10 different markets that you can see up here in one quick glance and keep track of to see what is each market's current market stage. Now let's take a look at what we see here with our utility labels that we've just built. First off, I wanted to point out how many of these commodities are currently in a market stage of acceleration. 8 out of 10, so nearly 80% strength if you were to look at this as quote-unquote commodities as an asset class or commodities as this utility label belt. 80% of this belt is telling you that there's full strength, full steam ahead. So to me, very clear idea that money is flowing into commodities. Now, 2, where do we see the 2 markets in which we don't have that market stage? 1, soybeans, 2, corn. So let's start with soybeans first. Inside of soybeans, we can see that this market stage is not in any of these stages, rather it's an accumulation because this market pulse is currently gray. Also, I see a whole lot of chop here, but another way that I would construe this is a breakout above 1080 would switch this market pulse right back to green, and soybeans can very easily flip with the other commodities. However, when you contrast it with gold, When you contrast it with silver, you don't see the same strength here. So soybeans, one that I want to look at a little bit deeper. And in fact, the way I want to look at this is with some seasonality, which gives us an idea of how this market tends to move. I'm using 20-year seasonality here. And what I see for soybeans, if we take a look, once this data finishes loading, Jan, Feb, solid months. I want to avoid March. April, solid month. The summer months, not that great. And then it starts to pick up October, November, December. That's when it seems like maybe soybeans might pick up. So still some time, at least historically, that we should expect a little bit more of this choppy behavior in soybeans. The second opportunity we see here is corn. Corn we see in a market stage of deceleration, so let's see if there's something here that we can make use of. Now, the one thing in corn that I've already done is ran some Fibonacci extensions to compare this move here. And what I found interesting is we're slamming right into that level, which is 428. So 428, very key or interesting level. Why I think in corn, because if we were to hold that 428 and bounce from here, then on this weekly time frame chart, this feels more like, let me draw it out here, a bear channel of sorts, in which we might be towards the bottom end of it and have a nice bounce here inside of corn. So we come back to the seasonality, see if that gives us any kind of support here. And same thing, we see that these summer months, not so good, starts to pick up October, November, December in terms of seasonality historically. That's not to say that's what's going to happen, but it gives us an idea that we typically don't see that same level of move. So 428 is that level that I'm looking at, and I want to try and zoom in on this 428 level to get as close to it. I imagine we can slip all the way down to about 420, which on the weekly chart doesn't look that bad, just looks like a stone's throw below the 428. On the daily time frame, feels like a little bit more of a fall, but 428 to 420, I think would be a nice place to build up this position in corn. Now the question is, we figured out corn through our utility labels as the one weak commodity sector, maybe a place we have an opportunity for an extra skewed risk to reward ratio. That's why we're looking at this, to try and see where we can skew that risk to reward. We looked at seasonality here. Seasonality doesn't necessarily support us if we load in 20 years worth of data. If we load in 5 years worth of data, August, September starts to pick up. Again, could start earlier. I like this symmetry here inside of corn. Now we come into specific ways to play this. And that's where I thought this opening range breakout setup, and this is the 15-minute breakout, so 9:30 to 9:45, 9:45 to 10 o'clock. I think this 15-minute breakout to that long side offers a really nice way to play the volatility in corn, and even to the short side, if you will. It's another way to play that volatility to the short side. And for all of our Volatility Box members, this is the opening range breakout backtester that's included for free with your membership, and I'm testing the following settings: a full range stop, a half range target with the following 15-minute ORB breakout. So this is a little bit of a longer video, but I'm hoping that there was a big connection that we made in here. We started by first building this very simple commodities utility labels indicator to track 10 different commodities in one quick view. Now, for buy the trend, buy the pullback setups, we know the 8 different commodities which currently have a market stage of acceleration, and those are the 8 commodities where you want to look at for buying strength moves. These are simple trend pullback moves, looking for just retesting previous highs. Now for skewed risk to reward trades, that's where I like to find outliers. And I think corn here is a really nice outlier. If you take a look at corn, it seems like we're pulling back into Fibonacci retracements. It seems like 428 to 420, a nice $8 zone. We found a way to play this using intraday volatility, so we don't really need to take overnight risk until we actually get the signal to take overnight risk. And I think that brings a complete picture to joining this larger money inside of commodities, but in a way that is a little bit more accessible to us as retail traders. I hope you found this video helpful. I'll leave a link to download the final version of the indicator in the description box below. Take care, everyone. Good luck trading, and I'll see you in our next update.